What's up, guys? This is Cole and Jordan with the Brentford Exchange. Today, we're going to be doing our stock breakdown that we've been talking about the past couple of days. We had you guys call out stocks on our Instagram and in our Discord chat. We have like 7 or 8 of them to break down for you guys. The first one being Goldman Sachs. So we're going to be looking at basically the fundamentals and the technicals for pretty much all of the stocks that we have here right now. The first one, we're doing Goldman Sachs first to get it out of the way because I just think fundamentally right now, a lot of the big banks on Wall Street are in over their heads, to say the least. Just to keep it short on this video, I'm just going to say that they're in over their heads. But let's get to the technicals on Goldman Sachs. So basically, I think that it doesn't look terrible, but it doesn't look great. I think that it's pretty possible that we could see a pullback on Goldman Sachs, at least to this SMA here, which is this yellow line. I think that probably that's what you're going to end up seeing is it pull back closer to that SMA, because you can look at the MACD. The MACD is pointing down, and the RSI is somewhere in the middle. So basically, and you can kind of see this sideways pattern, how Goldman Sachs is moving right now. It's just kind of consolidating. So really, it could go one way or the other. I think it's just something that you want to. It's neither a buy right now nor a sell.
Yeah, and everything we're looking at it from like we're day trade swing traders, so we're talking like mostly the short term. And with it, with Goldman Sachs, the way it's consolidating right now, it's not really something that we would want to be a part of. Plus, fundamentally, we can make a whole other video as to why we think the banks are not going to be where they once were.
Yeah, and that's long term. I mean, that's within the next year to 2 or 3. I mean, basically the upcoming years. I mean, fundamentally, we don't like where the banks are sitting right now. Not just Goldman Sachs. That goes for Citigroup. That goes for JP Morgan Chase. That goes for a lot of the big banks.
Yeah, another thing with Goldman Sachs. So this is one of the stocks that follow. They tend to follow the market pretty close. So the market, it's been experiencing a nice little uptrend, but like I said, we can make a whole nother video on it. I don't think that's going to last very long, so you're going to see a lot of these blue chips continue to fall with the market as it declines. So Goldman Sachs is going to be right there with them. It's seeing this really big consolidation period, which is kind of unlikely. So it's definitely, in my eyes, I don't think it's going to just have a random spike. I think it's either going to hit that SMA, which is at 186. It's currently sitting at what?
It's currently at 186. No. That's where the candlestick is. This gold line here, this little yellow price. He was right. 186 is where the the SMA is sitting at right now. But like I was just telling him right before this video, I mean, the odds of the longest economic expansion in American history to be followed by the shortest bear market in American history is extremely unlikely, which is basically why fundamentally, just to keep it short, fundamentally why I don't like Goldman Sachs right now. And technically, like I said, I just think that this could go either way right now. I mean, I think most likely, I think that we're going to see a pullback to that SMA, or at least it's going to meet that SMA and bounce off of that SMA. If it's going to continue to uptrend, I think it has to bounce off the SMA first.
So if we were going to buy into this, what I want to see, I want to see it at least break above this resistance. So probably 205, 204.
Probably $200.
200?
I would say 200 is a good price point for Goldman Sachs to at least break before you think about getting into this stock. And again, I would rather see the MACD pointing up than down, and the RSI is basically in the middle. Like we said, the stock is consolidating, kind of just moving sideways, trying to pick a direction to move. So that's basically what we got to say on Goldman Sachs. Next, so basically the next one here is Alibaba. If you guys have never heard of it, it's not it kind of goes hand in hand with Shopify. It's not like Shopify. It's more like Amazon, but for cheaper products. People like to use it when they're starting drop shipping stores. When people use Shopify to start little online retailers, a lot of the items that they're selling on these online like drop shipping stores will come from a website like Alibaba. That being said, I really like where it's at fundamentally, because online retailing is definitely the future, which is why I also like Shop. I like Shop fundamentally a lot. I think it has a lot of room to keep growing, because again, that is that's the type of thing. Shopify is the type of thing that's taking out department stores. I mean, that's why we talked about in the last breakdown we did. I think it was JCPenney and kind of those department stores going out of business, which is why Amazon's been doing so well, obviously. But the Baba's kind of in the same thing. So fundamentally, I like it a lot. Technically, let's talk about technically here.
Yeah. So technically, what we like. Let me see. Sorry. So technically, why we really like this. So as you see, this SMA, this gold line, it was getting rejected multiple times by that. Broke above it, tried bouncing, fell below it. As you know, we always say if it's trending above that gold line, the SMA, then it's currently uptrending, and it's doing exactly that right now. So it's been on a nice little run, breaking resistances. But the RSI, obviously, you see it's in the overbought territory, which, that's calling for a pullback, which would make sense. I think it'll have a nice little pullback. Just zoom in like a little bit, kind of like current.
Probably pull back to the previous high, which was around 172ish. It looks like, or 173, 172.50. Probably pull back to there, or pull back to the EMA, which is that blue line, whichever comes first. And even if we want to bring it down into, let's look at it on a smaller time frame, so we can use the VWAP for reference real quick. It's definitely peaking out at the very top of the VWAP, so it's likely that this is going to. Actually, it's not even likely. I think that it's almost impossible that this doesn't pull back before you see it to continue its rally. So that's where BAB is at. I still, like we said, fundamentally really like it. Technically, I think it looks good too. It just broke a big resistance there, really big resistance, and it's still uptrending, which looks good. Still above the EMA, still above the SMA. I just think it's due for a pullback because it's pretty overextended right now, as you can see with the RSI. But that's it. You have anything else on BA?
No, I mean, overall, I really do like it as well. So this would definitely be a buy if I was going to get into it. I think I would just wait for a little pullback in this upcoming week and then get in. I mean, even if you got in right now, I think you'd be safe, but get in at the best price possible. And everything's saying it's going to have a little bit of a pullback.
Don't want to buy at highs. You want to buy low, sell high. So that brings us to our next one, though, which is TMUS. Which is T-Mobile. Obviously, everyone's heard of T-Mobile. That being said, okay, so first off, right on the bat with this one, RSI is on the overbought side, which is obviously calling for a pullback. Same thing with the last one, but this one, instead of the MACD pointing up, this one, the MACD is already starting to curl down, and you can see that it kind of hit a peak here and it's starting to pull back. That being said, I think that basically with this one,
I think it'll definitely pull back down.
I don't think it's necessarily going to go all the way back down to the SMA either, but if it doesn't hold on this EMA, its next stop for support would be all the way down at about $70 or 70 almost $71, about $70.85, somewhere around there. But call it $71. I think that's probably where it has a good chance to pull back to, assuming that it doesn't hold this EMA, which based on the RSI and MACD looks like it might be the case. It might not hold that EMA, so I would say wait on T-Mobile. That's definitely a waiting game. But that being said, one thing that we noticed, if you go look at AT&T or if you go look at Verizon or Sprint or any other phone carrier right now, T-Mobile looks to be outperforming them by a good bit.
Yeah, no, and that's one of the big things that kind of threw us off is when you hear Verizon and AT&T, you really think that they're like the powerhouses, and they're the biggest
phone carriers.
Yeah,
pretty
the phone
much,
carriers.
the most popular.
So, but overall, if you're looking for a growth stock and you're looking for something that will bring you profits, other than if you look at AT&T or you look at Verizon, the stock charts really don't look like T-Mobile does. T-Mobile, uptrending. It's above the SMA. It's uptrending. Yeah, we think it's going to pull back a little bit just because it had this really nice run, but that doesn't mean that the run is over. I think it's going to pull back, continue the uptrend. So if you can get in around $70?
Yeah, around $71. And then something else to consider, though, as we'll get to later in this video, especially when we talk about, actually it's the next one up, which is Walmart. We noticed that we'll talk about some economic data, but basically it seems to us that people are kind of trying to stretch dollars right now. Restaurant sales are at a 4-year low, I believe. So that being said, if people are trying to stretch dollars, I think T-Mobile might be a little bit cheaper than AT&T or Verizon, which might be why they're performing so well right now, and that might be why they beat earnings. But at any rate, yeah, so basically T-Mobile, fundamentally, I like it because it does look good relative to other providers, and also technically it looks pretty good still. I just think that there's going to be a pullback possibly to around the $71 mark where you have that old resistance. But that would be, obviously old resistances become new supports, as we've said on this channel before. So I would just wait for the pullback on T-Mobile. But that being said, otherwise it looks good. So let's move on to Walmart, which is the next one up. And like I said, with this one, fundamentally, why I think Walmart is good to start off with this. So basically, like I just said, restaurant sales are at a 4-year low right now, and Walmart just beat earnings by a hell of a lot. You can see down here they beat earnings pretty well, which also helped this spike right here for them. But at any rate, I mean, a reason that could be happening though is that people are trying to stretch dollars. It's expensive to eat out. It's expensive to eat at restaurants, and if you look at Walmart's balance sheet, or if you look at where the money's coming from, where that revenue is coming from, a lot of it was groceries. So if people aren't eating out at at restaurants because it's more expensive to do so. Obviously, they're going to be looking to stretch dollars at cheap grocery stores, cheap markets like Walmart. They might not even be using a local, like maybe there's an Acme closer or a Wegmans closer or a Food Line, whatever closer. But Walmart is pretty cheap. It's pretty much as cheap as it gets. So a lot of their revenue coming from groceries right now, and restaurants at a 4-year low tells you that people are stretching these dollars, which kind of plays into that T-Mobile fundamental. Like I was saying earlier, how T-Mobile might be cheaper than AT&T or Verizon. It just seems like fundamentally Walmart's a good play right now, especially because they just beat those earnings and because people are stretching dollars. At least that's what the data says.
And then for the technicals, obviously here the technicals speak for themselves. They're really great. Like he just went over the fundamentals. If you have the fundamentals and technicals both, like almost screaming a buy, then overall the stock is something that you definitely want to be looking at. So you see here, it broke above this resistance that you once had, and now it's bouncing off that. So it's kind of consolidating, but that was a really strong resistance. It got rejected there twice, and now it's consolidating around there. Right. It pushed way above that, and then it corrected, obviously because of the earnings, but this pullback is healthy. It's not going to skyrocket forever. So I think now would honestly be a pretty good time to buy if you wanted to get into Walmart, because fundamentally and technically they're both agreeing with each other. So right. I think it would be, a pretty good...
And I agree with that. The only thing that I might wait on is I would like to see the MACD start to curl back up and point up, because like he said, it's also consolidating right now, so this might be one that you might just want to wait. Probably Monday.
Start seeing some green candlesticks. Yeah, you want to see like two big green candlesticks like back to back, because right now I think... Yeah, you want to start seeing more green candlesticks.
Yeah, definitely want to see it. Yeah, you definitely want to see it pop above this blue line, which again is the EMA. You want to see it break above that because you can see it consolidating in between the EMA and bouncing off. So it's basically right now what it's doing is it's using the support at $99 or $99.15, and it's just kind of bouncing off the EMA, bouncing in between that and the support, and it's going to have to pick a direction to go either one way or the other. It's either going to fall through support or it's going to break above the EMA, which is acting as resistance right now. If it does so, it's going to continue to trend up. So Walmart looks pretty good. Like he said, it's just consolidating, and that's pretty much where we're going to leave it with that one. I would just wait a few. You want to see some green candlesticks. You want to see the MACD start to curl back up, and then it'll be a good buy for you. We like Walmart fundamentally and also technically after it's done consolidating.
Mm-hmm. So ACB is one that we covered. We did like the top 3 weed stock videos. I think we've covered it a couple other times as well. Overall, if you plan on having something long-term in your portfolio, I think ACB or any other marijuana stock, for the most part, is a pretty safe bet. It's a new industry. It's booming right now, and I think it's promising that it will bring you some profits.
Right, it has a lot of room to grow long-term, fundamentally.
So fundamentally, yeah, it looks good, and I like everything about it.
So technically, RSI is more on the undersold side, or underbought side, rather, which is good. It's sitting at about 43, which is closer to 30 than 70, so RSI not bad. MACD is... it does give you a green arrow, but it's not completely curling up. Basically, what's happening is kind of the same thing with this one as the last one. It's just kind of consolidating right now. It is trending below its EMA, and it's trending below its EMA or in between its EMA and also its support, which is a old resistance. And it's basically just kind of trending in between there, and it's going to have to pick a direction to go, just like the last one. And that being said, I think that it's very possible that it does move in an uptrend. If it does, though, then you just have to keep in mind that you also have resistance at $7.50. So let's see what kind of returns that could offer. Assuming, let's say, from $7, if you manage to get in at $7 and ride it up to $7.50, that would offer you a good about 7%. So ACB, assuming that it does break above that EMA and continue to trend up, would offer you about 7% potential profit, which isn't bad. I mean, that's pretty good.
No, that's great. I would just have if you plan to get in anytime soon, I would just make sure you have a stop loss around one of these
absolutely
this critical support. So like 685, definitely have a stop loss around there, because if it breaks through that, it most likely isn't going to get caught until the SMA, which is at 662. Right. So just to be safe. But overall, I think ACB is a strong company. I think the marijuana industry as a whole is very strong. So definitely
looks good. Just kind of like the last one, you just kind of want to see or which one. It was either it was either Sprint or T-Mobile or Walmart, whichever one that was. But
there's been a couple of them that are kind of consolidating.
Yeah, kind of consolidating. You just want to be looking. You want to be waiting for these green candlesticks to kind of pop above that EMA. Like you can see, they popped above here, and then you see how this red candlestick come. But the thing with this red candlestick is that it didn't catch on. It obviously ended up ultimately falling through that EMA. So you want to make sure that you see some green candlesticks above there. You want to see a red candlestick and then more green candlesticks to confirm that EMA is going to act to support, and it's going to continue to uptrend. And then again, like we said with that one, resistance is about 750, and you want to keep your stop loss at about, what was it, 685? 687.
Somewhere around there, yep.
Yep, 685 would be good. And that being said, that's going to move us on to our next one. So that was ACB, which was a pot stock, and this moves us on to BAM. Bam. Which is Brookfield Asset Management. Fundamentally, we don't know a whole lot about this company. If we're being honest, we would have to do more research, so we can't give you much fundamental news about BAM or Brookfield.
All we know is that they're just like an asset management company, so they have like a lot of real estate. So.
Which is good. I mean, if they do own a lot of assets with actual intrinsic value, that's going to be a good thing fundamentally for them. But I mean, fundamentally, we don't know like we said, we don't know a whole lot about them, so you'd have to do more research. But we can talk about the technicals. And for this one, I think that the technicals are pretty important because we can even look at a 1-year chart here, which is what I'm going to pull up. And it looks like this. Whoops, there we go. It looks like this stock BAM is pretty much peaking out right now. It looks like it's completely, in my eyes, due for a reversal. I mean, you can see here it kind of peaked out around this area, and again, it looks like it's peaking out at this resistance here, which is at 44.50. And you can even see, back in the past when it does have these long expansion periods, it will have this pullback, and then it will push back up to resistance. And you can kind of see here it had this long expansion, and then it pulled back, bounced off the EMA, and now it's pushing back up towards that resistance again. The question is, will it be able to break that resistance? Based on the past, I don't think so. It's not saying that it's impossible, but based on the past, it looks like it's due for a reversal.
Yeah, it definitely looks like. I mean, this pattern right here that you're seeing is almost identical to this, if not like pretty much identical.
It's pretty much the exact same. Another thing to point out is that on this 1 year, you can look at the RSI down there. You're way close to you're closer to overbought rather.
They're both showing. Yeah, I mean the MACD signaling a buy, but that's just because of this little V-shape pattern it's showing, which. I mean, now it's starting to get rejected by that resistance.
Right, and I think that you're going to start to see the MACD reverse on this as well.
And then you also want to keep note that it's making lower lows, as you see right here, you know? So.
Yep, and that's important. So you could actually draw a descending triangle right here, and if that is the case, then you're definitely looking at a stock that's peaking out right now. I wouldn't touch this stock right now. It just seems to me like it's more likely that it would be getting ready to reverse rather than keep rallying. So that's where we're going to leave it with BAM, and that brings us to our last one, which is ROST. Ross, if you guys have never been to a Ross, it's kind of like a Home Good Marshalls type deal, but for clothes, I believe they sell that. It kind of goes hand in hand with the Walmart thing, with the T-Mobile thing. If people are trying to stretch dollars, it makes more sense that they would be taking their dollars to somewhere like Ross or Goodwill that's offering cheap clothing rather than going out to, like, I don't even know, going to LL Bean or wherever.
Going to Louis V, you're not going to be balling out. Yeah. So I think that's why we're seeing this huge run that it's having.
Right.
If I'm not mistaken, I'm pretty sure it has earnings on March 5th. I think that's the one I looked up. So just keep in mind, earnings March 5th, and then it's been beating earnings, and these Q4 earnings that it's calling for are way higher than its Q2 and Q3 earnings. So with the holidays, I think that it will reach that because holiday season is bringing a lot of profits. But
and that being said, I think that if it does end up beating earnings, I think that you could definitely see a good rally in ROST without a doubt. You can see here that it's pretty much pushing up against this resistance here, which was an old support way back here. But it's looking like it's very likely that it's going to be able to break. It's already broken that resistance, but that doesn't mean that it's going to hold there. If it does end up holding there, then this could be a really good buy for you. It could offer, so I would say that the next resistance is closer to like $98, pushing up that way. So let's see what that would offer if you could get in around there. It's percentage that it could offer, and this looks like best case scenario before it reaches a resistance is only about 4%. So you have to decide if what you're going to be putting into this is worth gains like that. It moves pretty slow. This whole rally right here from this period was December 25th. So this was like right around holiday season that this rally started. December 26th all the way till now, which is two almost 3 months later. So you can see that this is a decently slow moving stock. It took a while, almost 3 months for this whole rally to happen, and now it's just reaching resistance here. So if it does end up beating earnings, it could rally for a little bit more, but I don't think a whole lot more. I don't know if it would be worth, especially the people out there that have smaller accounts. I don't know if this investment might be worth it for you, just because of how slow it moves and also what the potential for profit is.
This is something that if you have a portfolio of a whole bunch of stocks and you want to diversify and be like, safe risk management, yeah, sure, throw this in there. But if you're looking to grow an account pretty quickly like a day trade swing trader would, I think the opportunity cost really isn't there, and you'd have a better chance finding something else that moves a little bit quicker.
Definitely. So that's going to be it for this one. We are always going to do more of these. So if you guys ever want to call out more, don't be afraid to just DM us on Insta or get in our Discord chat and call us out in there or call it out in there. And we'll be happy to make these videos. We'll be doing more of these videos in the future. So if you guys have anything else to call out, just be sure to leave it in the Discord or DM it to us on Instagram or leave it in the comments, whatever it may be. Other than that, you got anything to say?
No, that's pretty much going to do it for today. We're going to have another video out tomorrow, which will be, I think tomorrow's the 25th.
Yes,
pretty sure. So.
And that'll be a course material video, so that'll be up. And other than that, just get in our Discord. Be sure to like and share this video if you can. And I hope it was helpful to the guys that called these stocks out. And shout out to everybody in our Discord who's been working really hard. It's been really active in there. People have been taking a lot of profit, so shout out to those guys. And other than that,
that's going to do it.
Fit time.
So thanks for watching.